Okay. Okay, can you see it?
Yeah, can you see the presentation on your
Yes,
end?
I do. Yes, I think I can. Yes.
Yeah, okay. Maybe live stream. Okay, well, let's do
Okay,
it.
can you see it?
So whoever's
Cool.
on, is anyone on or no?
Okay, I can hear it double. That's why I don't know which one I'm
Let's do it. So whoever's on, anyone up or no?
okay, I can hear it double. That's why okay, I'm going to turn the volume down on one. And can you hear me still?
Yeah, I can still hear you.
Okay, so then okay. Hi, good afternoon, everyone. Um, this is our third webinar on information that you will want to hear about because we're talking about getting free money and how we're going to be talking about another program today. And Saul is my partner, Saul Fraustro,
How's it going? How's it
and
going? Hope everyone is doing
yes.
well.
Uh, so I'm Soraya Machado-Powell, and I am from Villa Home. I'm a realtor for the last 35 years, and I've seen the ups and downs of the market. And so you asked me, I have a lot of resources that I can help you with, and my partner is, go ahead.
My name is Saul Farauso with CC Financial. I've been in the industry for 5 years, just helping each individual accomplish their goals depending on what they're looking for. Um, but yeah, a lot of opportunities out there for you guys to get new free money, different down payment assistance programs out there as well. And there's different ways to get into a home. So don't feel like that you're not the only one, that you feel like you're troubled. There is options. You just have to sit down and see what we can do, game plan, and execute that game plan to accomplish you guys' goals. But with that being said, Soraya, today we're talk about what the difference between pre-qualification towards pre-approval. Some people have a misconception, and realtors as well throughout the industry have that misconception regarding, what's a pre-qual and what's a pre-approval, essentially. But
Okay, that's
yeah,
good.
let's get into it. So yeah, first question, what is a mortgage pre-approval? It's essentially us lenders, we're evaluating your financial situation based on your employment, on your credit details, monthly liabilities that are going to appear on your guys' credit report, and then obviously the funds, the assets. We don't have any assets, that is okay. There is a program out there that can help you with assistance on your down payment portion or as well with the closing costs as well. Obviously, having this mortgage a pre-approval, it's going to be being seen as a more serious buyer in the market, and sellers will take you guys more serious and entertain you guys' offer since we have that. It's called a pre-approval letter. So let's get down into it. What's the difference between a pre-qualification and a pre-approval? Pre-qualification is just going based on either just reviewing the pay stubs and W-2s and what the income that you guys have there. It's not verifying you guys' employment or verifying you guys' credit. It's just going based on the income that we see on the pay stubs and W-2s, and then obviously what you guys mentioned on you guys' monthly liabilities. That is considered as a pre-qual, so that's rough numbers. So let's just say, for example, Mary makes around $6,000 monthly based on what she tells me. And she tells me that she has some monthly liabilities, such as a car, some credit cards, and let's just say a personal loan as well. So based on that, I can give her a scenario, and that would be considered a pre-qualification. So just a rough estimate. Just keep in mind this, sellers won't consider the offer as much if they see a pre-qualification. Obviously, they want to see that pre-approval, which is going to contain, the details of your credit, along with what's going to show on your credit report, along with that DU approval, which is a desktop underwriting system. Essentially, they're going to want to see that letter to take your offer more serious on that end. On my end, what we look at on a deeper scale is obviously verifying your employment. This is where we go reach out to your HR, human resources, if you are working for a company. reach out to your human resources to get a breakdown of the income you guys have been earning for the last 2 years and year to date on your base salary. And then if you have been receiving any overtime or any other type of pay for the last 2 years and year to date, then we can use that income as well. So those little details, that's considered as a pre-approval. That's a little more extra work for us to verify your financial situation and see how much you're approved for. So once we have that pre-approval packet, or that full qualified pre-approval amount based on the DU approval, once we have those numbers set in stone, that's when we review everything with you, make sure you guys are comfortable, one, with the funds, whether it's a regular FHA program, conventional program, or whether it's a down payment assistance slash grant program. Make sure that you guys are comfortable with those numbers, and then once you guys give us the green light, and at that point I can send over that pre-approval packet to Soraya, so that way you guys can start searching for homes. Is there anything you want to add on to that, Soraya?
Yes, I know that a lot of times the buyers want to go out to take a look at properties before they receive a pre-approval, and that's not an advisable thing because we can't make an offer immediately if you like the property. We'd have to wait for all of these processes to go through. And so we'd have to work all these things through, the numbers and everything else before I can take you out. Okay, so just remember, get that letter first. I will introduce you to Saul, and then you get that letter, and then we go from there. Mhm.
Like I said, going on to the next page, what we look at, as mentioned, employment, whether you guys are working for a company or self-employed, we do want to see employment history of the last 2 years consistently. Obviously, if you guys have been working at the same job, that's going to be more favorable terms for you guys and easier qualification as the banks won't ask many questions since you guys are consistent with the same job. Let's just say you guys have multiple jobs within those 2 years. That's not a problem. We just have to get those verifications of employment for each job so that way we can have that work history and confirm the income as well that we can use. Second portion that we do look at is that credit portion. So minimum FICO that we do need for a FHA loan, which is a 3.5% down payment program. Minimum FICO that we need is a 580. Obviously, we do look at the three bureaus, which is your Experian, TransUnion, and Equifax, and whatever lands as is your middle score, that's like the middle of the score that we can factor in for the qualification. Like mentioned, the monthly liability, so that's going to be any student loans, credit cards, any car payments, or any personal loans that appear on your credit report. Obviously, if you have any collections or charge-offs, they may affect your qualification, just depending on the amount and how many you have as well. And then finally, obviously, the assets, which is the funds for one, the down payment and closing costs. This can be any funds that are saved into your checkings, savings, any investment portfolios that you guys have, and then along with like a 401k or any other retirement savings account can be used essentially if you're allowed to pull out. So that those are the four main factors that we do look at. Some people may ask, what if I'm self-employed? No, obviously self-employed people, well, clients have a different situation and may qualify for different programs depending on their situation. So keep in mind, there is programs for self-employed borrowers. You can still qualify for down payment assistance programs or grant programs. Obviously we do have to sit down and see where you guys currently stand at, based on the taxes or based on your bank statements as well. So it's best to see where you guys stand and get an idea where you guys are at financially, so that way you guys are looking at homes more comfortably, more confidently, knowing what you guys' numbers are as well.
I have a
So
question.
yeah,
So if a person changes jobs, within, they don't have 2 years straight work history, but they get another job in the same career, for instance, does that count as that?
most definitely, as long as like the gap period is not more than 30 days, as long as we have that offer letter and the first pay stub in order, then at that point we're good to go and we're able to maximize that full-time income based on what showed on the offer letter, then obviously showing that pay stub, showing the full-time amount as well, depending on how the situation. Got it. So, what is needed for your pre-approval process? So, if you are working for a company for the last 2 years, it will be the last 2 years of your W-2 form. So, 2024, 2025, pay stubs covering the last 30 days, whether you're bi-weekly, weekly, semi-monthly, depending on how you guys get paid, it will be the most recent pay stubs covering the last 30 days. Obviously, the contact information that's going to appear on your W-2 information or on your pay stub as well. So that way we can reach out to your human resources to confirm that verification of employment. On the assets end, will essentially be your 2 months of bank statements showing your funds have been seasoned for the last 60 days. If they haven't, that's okay. We can always build up a game plan on that portion. Obviously, assets can come from a 401k account or another retirement account if they allow you to pull out funds as well. Depending on the program, we may do what's called a gift letter. So let's just say, a family member already has the funds in their account and you have the cash. You can always create a gift letter as well. Get that approved by the lender, make sure it's approved. So that way that family member, well, essentially like your dad or a dad or a mom, is sending those funds to escrow for you as a gift, stating that you're not gonna have to pay it back to them. So that's another way you can go about it as well, on that portion. And then obviously, we do need to see your some type of identification. So it's going to be an ID, driver license, and then that social security card as well. No. Is there anything you want to add on, Soraya, regarding that portion?
No, that's and I do recommend that you're completely honest with your lender, Saul, and completely honest with me. But when whatever information you're given to him, it will remain, with him. But just be honest about, the money and where it is and things like that, so that we can know what kind of game plan to come up with. Yes.
Correct, correct. And just keep in mind, there's multiple different scenarios, so there's a lot of things to be seen. So every situation is different, so don't feel like there's not a game plan for you. So there's always a way to go around things, work things out and see what we can do. If there's a problem, there's always a solution. So keep that in mind as well. So what we do look at when it comes to approval is understanding what's called the debt to income ratio. There is two debt to income ratios that we do look at, which is one, the front end. This is based on how much mortgage you can qualify for based on the income that you guys have. With FHA, the max amount that we can go is 46.99% of your total income. So that's the max amount of the mortgage payment you can qualify for. The back end DTI, which includes the total mortgage payment that you qualify for, plus your monthly liabilities that you're currently paid for that appears on your credit report. That's going to be another percentage. So that total percentage that we can use of that income would be 56.99%. Obviously, the lower those debt to income ratios are, the better chances of a better terms on the banking side once they do review your guys' file, essentially. What you guys can do to lower you guys' back debt to income ratios is obviously if we do need to pay down some debt, that's one way to go about it. Obviously, we can always buy down the rate if needed. So, but keep in mind, if you guys feel like you guys have multiple monthly incomes, maybe those monthly debts are very minimal. So don't be scared if you have multiple. There's always ways like we can restructure your guys' scenario and help guide you guys to execute that game plan when it comes to the monthly liabilities and the total mortgage payment you guys can qualify for. Is there anything you want to add on here or any questions, Soraya?
No, I think I got that. These debt to income ratios have changed quite tremendously because it used to be a lot less, right? Before. So I guess because a lot of people have debt in these days, right? Yes,
Yeah,
more
so
realistic.
yeah, that's the biggest thing right now. So there's a lot of multiple programs that require different debt to income ratios. So whether you're applying for down payment assistance programs or grant programs, they're going to have their own restrictions when it comes to the debt to income ratio since they're helping you with the down payment. So keep in mind, we do want to apply for those type of programs. monthly liabilities have to be slightly minimal, just depending on where we're at as well. And then obviously reviewing that income portion, that's going to be the biggest factor as well. But usually, depending on where a FICO score is at for a down payment assistance or grant program, we're looking anywhere for debt to income ratio to be under 43% to 45%. If we have a higher FICO around the 700s, or sometimes 680, depending on the bank, at that point we are looking up to 50% of your total
Hmm.
income for down payment assistance slash grant programs. Obviously,
Wow.
each programs are different. Going to FHA, what I have right here, obviously they go based on 46.99% and that 56.99% on that portion. You may ask, then why does like a private bank require me to be under lower? Keep in mind, private banks, they are private lenders. They have stricter guidelines and they make it slightly harder for you to qualify. With us, we do have more leniency and less restrictions with our banks as well, so we can help you guys qualify to and maximum help you guys get that max approval as well.
Well, I'm happy it's not as conservative as it used to be then. Okay, that's good. That's great.
Correct,
Hmm,
correct.
hmm.
So, what's the pre-approval process like? So, obviously, is one is getting sitting down with us or meeting via Zoom or even a phone call to first understand what you guys' scenario. Once we understand the scenario, then I can best guide you guys, give you guys the list of items that needed, and you guys can send it over. We can break it down. I can verify you guys' employment and credit if you guys are working for a company. If you guys are self-employed, then it will be a different process, but very similar as well. Once we review all items on the credit portion, the employment portion, also with the funds, and run it through our what's called a desktop underwriting system. At that point, once the desktop underwriting system gives us that approved eligible, meaning that they gives that green light for your guys' file, at that point we can initiate that pre-approval packet. Um, Once we have that pre-approval packet, that's when you guys can go start seeing homes and then start submitting homes on the homes that you guys like as well. What is underwriting? That's a whole separate portion after we get the offer accepted. That's when we submit the file, your guys' file to the lender, and they start reviewing your file. They essentially audit it and ask for different conditions depending on the situation.
Okay, one thing I must add is that when they sit down, when you sit down with Saul, to be able to discuss these things and these scenarios, you have to let him know what amount you would be comfortable paying. But let's be realistic. If your rent is 1,500, more than likely that is not, too much of a home, or, possibly a small condo or something, but you have to be a little bit more realistic with that. But what amount would you feel comfortable paying? Not the maximum, because he's going to qualify you or he's going to pre-approve you at the max amount, but then he can give you like a scale of different things and different scenarios so that you can know where would you feel comfortable? What feels comfortable? And don't take too much on, because you have to be able to pay that mortgage every month without, sacrificing so much. Okay? Yes.
Correct, correct. That's the biggest focal point for me is one, making sure that my clients are comfortable with the payment, and then two, the funds to close. Obviously, if you feel too uncomfortable with that payment, and the house is worth too much, then I don't recommend going into that house, because last thing I want is for you guys to go late, and that's going to affect you guys' credit and financial situation. So might as well just go with something that's more realistic that you guys are more comfortable with as well. And then obviously, depending on the program, after you guys' sixth payment, you guys are able to refinance as well. So keep that in mind as well going into the home buying process and looking for homes. Just be realistic and make sure you guys understand where you guys at, so that way you don't feel uncomfortable and you're like, yo, what's going on? I was not expecting this type of payment. So yeah. Tip of the week. So a lot of people will have that misconception about you guys have to put that 20% down, the 30%. Well, it's not true. You guys can put as little as 3% down, 3.5% down, depending on the program. And then, as mentioned for the last 2 weeks, and now there is those grant programs, there is that down payment assistance. just depending what you guys' goals are and what you guys are looking for. What you guys can always do as well, dep on after reviewing you guys' credit, as mentioned last time, obviously seeing how many monthly liabilities you guys currently have, make sure you guys pay those down shortly, continuously, and create a budget for you guys yourself and start saving a portion of your guys' check, whether it's every week, every 2 weeks, depending on how they pay you. Make that decision and make that choice if you guys want to accomplish your guys' goal a little sooner. Take $100, $200, whatever the case is, a small amount each week or every 2 weeks, depending on how you guys get to receive your guys' funds. What I recommend, if your guys' max approval, let's just say for example, is 500K, the down payment amount would be 17,500. So give yourself a game plan for, we can always sit down and say, 6 months, you can save this amount of money based on the numbers I see, based on the credit liabilities that we have right now. So we can set up a game plan on how much you guys need to save for the next 6 months if you guys do want to go that route with a regular FHA program. Let's just say, my main priority is going with the down payment assistance and saving as much funds, so only just cover for the closing costs, then obviously we can set up that game plan. But overall, you guys want to set up a game plan on how to save money, we can always sit down and do that as well, depending on the program that we want. Keep in mind that the minimum down that we do need is for 3% for a conventional loan, and then for FHA, 3.5% down. Anything you want to add on to right here, Sarah?
Yes, yes. One of the main goals of this is for you to start establishing a pattern of saving and a pattern of showing that you're being responsible with your money. So that's one of the goals of this is to just saving, and as Saul mentioned, saving a certain amount out of your paychecks. So if you continue to show that pattern of saving and being responsible with it, then it shows the bank that you are capable or, responsible enough to be able to afford or to be able to maintain that mortgage. So that's one thing that they start to look at, the patterns, right? So,
Correct, correct. Obviously, since we are going to look at the last 60 days of you guys' statements, obviously keep in mind myself and along with the bank, they are going to analyze it very thoroughly to see what's going on a daily basis through your accounts.
yeah, do they have to save 20%? Oh,
No. So if you guys, obviously, if you have that capital as an investor, you can always put that 20% down. But if you guys are first-time buyers looking to get going into a property with minimum down, no, you do not need to put that 20%. You can go as little as 3.5% down.
okay.
Common mistakes that people make during the pre-approval process. The biggest thing that I experienced one time was a client going out to purchase a car on while we're going to shop for home. So that's one big mistake. Obviously, adding a car payment or a big personal loan onto your guys' credit is going to affect you on the qualification. Why? Because we need to add that as a monthly liability. If you guys inquired for a new debt or new credit essentially, and you did acquire more debt through your guys' credit, then at that point we do have to consider it as a liability. So make sure if you guys are currently in the escrow process or currently searching for homes or just game planning, to not purchase big items through you guys' credit where you guys are doing this process. Another thing, obviously, do not change your guys' job while you guys are searching homes. As mentioned, previously the banks don't want to see consistency of you guys working consistent for the last 2 years and obviously for the year to date as well. Obviously, if you guys are changing jobs midway, we do need those items, the new employment letter and the new job, and then obviously that new pay stub, and that may take time depending on where we're at and how long ago you moved to that new job. Another item is moving our money around. So depending if the deposits are very high, more than 50% of your guys' monthly income, at that point it may be a red flag to the banks. So what I recommend is moving small amounts of money. Obviously, we can game plan, see where you guys' income amount, and then I can best guide you guys what's the max amount you guys can move around your guys' accounts if it is going to be with an account or possibly in cash as well. And then, as mentioned, apply for new credit. That applies the same thing as making the large purchases. To not inquire for new credit, new banks, new credit cards, or for new cars, furniture. I understand that we do want to get new furniture for the new house, but just wait after you guys complete the escrow process and purchasing the home. So that way you guys can apply for the furniture loans with calmness, and then you guys know that nothing's going to go wrong with the home just because we already finalized everything. Those are the four biggest things I would say. Obviously, biggest thing, do not lose your job during this process, or make those big purchases.
Yeah, yeah, so just totally all those mistakes that we've seen throughout the years, okay? You want furniture and you go in there and you start, applying for credit and stuff like don't do anything that will cause the consistency that they've seen to be way off. Okay, so you're gonna break this pattern of being consistent and now you're applying for credit all over. Don't do it. Don't do it. Okay, even if you're feeling that you want. Oh my God, I gotta have this bed. Well, wait, wait. Okay, so before you make any moves like that, and then don't move your money around because it looks suspicious. Okay, so just wait to do things. Okay, yes.
Correct, correct. And keep in mind, if you guys do these type of things, it may, extend the time frame as well. Obviously, like I mentioned before, if there's a problem, there is a solution. Obviously, we have to get everybody on board, make sure everyone is up to par to make sure we can keep the process flowing. So try to avoid these mistakes so that way, we don't have any issues. But, make sure you guys are game planning and not trying to change no jobs. Make sure that's secured. Make sure your guys' funds are okay and secured. But best thing is first talk to someone like myself or Soraya to understand what's the best way to go about if you don't have an idea on what to do. So it's okay to feel lost. There's a game plan for everybody. So you know, just know that there is something out there for you guys. So this is pretty much it. We're gonna wrap it up here. Next week we are gonna talk about about working with Soraya, obviously making those offers, how to structure it as well, and then obviously once we have that pre-approval, send it over to her and what she does on that aspect. She will go more in those details.
Okay,
But besides
yes.
that, is there any questions or any comments out there on the streaming end?
Hey, if you guys have any questions, you can always still put them in the chat on whatever social media you're on. If you're on YouTube, you can put it in there and we'll answer your questions still. If you'd like to get in touch with us, how can they get in touch with us? So,
So you guys can reach out directly through the stream. We can put our information there, and then our information's right here as well. Like here
right.
is our number, our email. We don't have the social media there, but you can find us on Instagram, Facebook. If you guys are on TikTok as well, I believe Soraya is. Are you there as well, Soraya?
Yes.
Yeah.
Yes. You
Yeah.
can find
So
me on any of those. That's fine.
yeah, so I'm on all social media platforms, so feel free to reach out to us through there, through our number here, or email as well. Feel free to come to the office if you like, just give us a heads up. But obviously, we're here to help.
Yes. And as usual, hey, just screenshot that, take her telephone number down, or as he said, find us on any of those social media platforms, and we'll be happy to answer your questions. And now's the best time to buy because guess what? Not too many people out there, that you have to compete against because it's not as competitive with these offers. And offers are being accepted if there are reasonable offers. So if you want to know more about the down payment assistance, call either one of us, okay? And we will tell you about the free money because it's out there. Okay? So we'll see you next week.
All right, sounds good, guys. See you guys next week.
Okay, bye-bye.
Stop sharing.